Welcome to 𝐿𝐿𝐴𝐷𝐿, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on 𝐿𝐴𝐷𝐿.
Hello, folks. Bill and Brian here with Energy Rogue doing our weekly update. I hope everything's going good with you guys. Listen, we're going to be talking about the petrodollar today. If you don't know what a petrodollar, it is not currency made out of crude oil. Okay, just so that you understand that there's not some fancy little currency that we come up with this in the evil oil and gas business that where we only trade in these little dollars called petrodollars. No, what it means is that it is money that's backed by crude oil. This is going to be an interesting discussion today. And so, Brian, I think we're about ready to go. But let's tell you what, folks, let's talk about a couple things we're doing, Brian, before we get started.
Okay.
First of all, we're going to be at 𝐏𝐫𝐞𝐞. I'm going to be up at 𝐏𝐫𝐞𝐞, Kansas Independent Oil and Gas Association annual meeting. I'm going to be up there that. If you're going to be part of that, come up and see us. We're also going to be at the OEPA golf tournament in September. We're also going to be at the NGAO annual meeting. It's also in September. And then Brian's going to go overseas. Both of those are in Tulsa. Brian's going to go overseas to impart his wisdom in the Middle East over there to UAE for the Gulf Intelligence. Is that an annual conference, right, Brian?
It is an annual conference. They do have a spring this past year. I believe it was virtual, but they do have this one. And I think they're in discussions of making the spring one in person as well.
And on top of that, we're going to be, we have an opportunity to speak at the PPROA, which is the Panhandle Producers and Royalties Owners Association. And in addition to that, that's going to be also in September. God, we're busy in September. Also in October, we'll be speaking at COPUS down in Houston. So we've got a pretty busy schedule, but that doesn't mean we don't have time for you.
Yes.
So be sure to reach out to us at rogue@energyrogue.com or bill@energyrogue.com or brian@energyrogue.com. And we want to talk to you about how we can help you be successful in your business.
Yes. And
first is the petrodollar.
Well, first it's the petrodollar. And so we're going to discuss the economic implications of the petrodollar system. So the petrodollar system, for those that are unaware, it's a critical component of the global global economy and the U.S. economy. Essentially, oil exporting countries predominantly accept payments in the U.S. dollar for crude oil purchases. And the reason this has a lot of relevance is you have countries that export large volumes of crude oil, and in exchange, they get US dollar. This relationship has changed dramatically over the last 10 years. In the last 10 years, there's a lot of reasons, fundamental reasons. We're going to dive into those. But we also want to start by understanding why we have a petrodollar system to begin with, where it started, what happens, what the impact of the petrodollar system truly is. So the petrodollar system, it does reinforce the US dollar as the reserve currency. It impacts oil trade, economics, geopolitics. I was about to say geopolitical. I've been listening to too much Peter Zeihan. So Peter, if you're listening, hey there.
Right.
Yeah, because he's always in Colorado. That's where I am. So
Exactly.
history and the potential path forward. And we will accept questions on this. We're going to try and go through this in about 30 minutes or less. That is a goal because we are packing in a tremendous amount of information into why we're here, where we are, and where we're going. So that's what we're going to talk about with the petrodollar system. So a little historical context.
Alrighty then. Alrighty then.
And keep those coming. We're going to need that to stay awake and whatnot, because we're going all the way back to post-World War II. And in post-World War II, U.S. emerged as a dominant economic and military power. And for those that have not studied the World War II, World War II was really raging in Europe, raging in Asia, and U.S. came in later into the conflict, and so really had fresh, new equipment, new troops, and really flooded the war with a particular strategy. And in that strategy, it allowed the Allies to win the war. So World War II has a lot of great history and great history lessons. Dan,
Technological development.
well, there's a great podcast, Dan Carlin, and it's called Hardcore History, and he goes in deep on World War II. So if you're ever really curious about it, take a listen for Dan Carlin.
But if you never heard anything about coal gasification, that was done in the world. That's what the coal gasification, where they turned coal into gasoline. That was done by the Germans.
Yes.
That was so there's a lot of things that happened during that. Unfortunately, during war, it brings technological advancement. And so some of them are good, some of them, we could have done without.
Right.
So so it also changes how the world operates, especially something as big as World War II. It did in World War I, it also did in World War II. How the world operates and how people see one another. And it's well, we'll just go on down with this. We're going to talk about the petrodollar.
Yep. Because we could be here for weeks talking about the
exactly.
World War II and the implications on geopolitics and what it did.
So, do you want? Hey, by the way, do you want some a real quick strange fact about World War II?
I do.
All right. So, where's the sheriff in Nottingham based out of?
The UK.
Robin Hood. Yeah. Sherwood Forest. Do you know that people in the oil and gas business from Texas and Oklahoma went to England during the war to produce oil out of Sherwood Forest?
Really?
Yes. Fascinating little deal. And Sherwood Forest was, and that's how they contributed to the drill oil and get it to the refineries in England to fight for the war effort in Sherwood Forest.
Alrighty then. Shall we go to jail?
Exactly.
That's what they wanted to do to Robin Hood. So
yeah, exactly.
In 1944, there was an agreement that was struck, and in the Bretton Woods system, and it established the U.S. dollar as the primary reserve currency. And we're gonna walk through, because this has changed a lot over time. They linked U.S. dollar to gold and to other currencies, but there was some interrelationship, and we're going to get into how this interfaces with trading. And again, we are just scratching the surface. Each one of these slides that we put together today could be a 8-hour-long masterclass on Forex, on oil, on international markets, on trading. Yeah. So all of these we are only scratching the very high surface of this. So the Bretton Woods established the US dollar as the primary reserve currency, linking it to gold. In the 1960s, there were, and into the 70s, there was a lot of inflation, trade imbalances, Vietnam War. All of this puts stress and strain on the US dollar, as well as the US society, and the gold-backed currency system. And in 1971, Nixon decoupled the relationship between US dollar and gold. That was when prior to 1971, they could only print the number of dollars equivalent to how much gold reserves they had. So that put a cap on how much dollar printing there could really be. It also introduced a whole new wave of economic theory. And again, we're only scratching the surface. We could be in a PhD level course because it initiated the era of the fiat currency. And I wanted to pull this up. This is a gold chart, and I think I found it on Trading Economics. But you can see, not very clearly, but I'm gonna rattle this off. So in 1969, gold was around $40. 1970, 35. So there must have been some things that were happening. 1970, $38. So during 1971, we entered the period at $38 on gold. Well, what happened in 1972 from $38 to 64? That is a massive shift. I know right here does not look like a massive shift because of all of this. And this has a lot to do with currency. It has a lot to do with money printing, has to do with a fancy term that I was introduced to in 2008 called quantitative easing. So
Everything is the devil to you, mama!
Exactly. It was the devil. The government set the price of gold and they were buying back all of the gold. The term was required. I don't know that everybody followed that. Yeah. To turn in all your gold to the government, and they set the price at $37, if I remember correctly. And when you turned in your gold, you got $37 per ounce per gold that you turned in, and you basically sold it to the government for that amount. And then for short time after that, they set the price of gold. Interesting enough, as soon as they had a significant amount of the gold in the United States, the rarity of it, that's where you start seeing it start to climb, because now there was not any gold really on the open market.
right.
And so
And
that's why you
so
go to $60 pretty quick.
Yep. Well, and that ushered in the age of fiat currency. If you read your US dollar right now, it says backed by the good faith of the US government or something like that.
But Nuke was still confused.
Yeah.
Exactly.
So I thought we were talking about the petrodollar. Why are we droning on about gold? Because of interrelationships. And we're only gonna touch a very high level of this. Please ask questions. There's a fantastic book called Intermarket Analysis by a gentleman, John Murphy. And John Murphy wrote two really good books that I would recommend to anybody that is in the trading market. And that is Technical Analysis for Financial Markets and Intermarket Analysis. Now, these are books that were written, I believe, in the 70s or 80s, but they still hold up today because it really talks about stocks and bonds, which historically have inverse relationships. So again, each one of these slides could be an 8-hour course on what is happening. And listen, drop it in the comments if you want a link to this document so that you can study after. Just hit us up, DM me, or we'll get it to you, or drop it in the comments and we will try and get it to you as soon as possible. So stocks and bonds often have an inverse relationship. So when bonds go up, stocks go down. When stocks go up, bonds go down. So that is the general rule. There are times where these decouple from those historical relationships and have different trends. So it is important to monitor bond yields as a leading indicator for stock market trends, because bonds are, this is a little known fact, all of us normal people, we trade stocks and some of us commodities, and bond traders trade the large dollars out there. And by dollars, I mean billions and trillions. I mean, these are massive, massive transaction. So looking at the interrelationship between interest rates, inflation, this is basically every Federal Reserve meeting is about this relationship. So that is, along with currency, a third element. So what about commodities and bonds? So we touched on gold. We're going to get into crude in just a little bit, but rising commodities and bonds often have a inverse relationship as well. Rising commodity prices often lead to falling bond prices or rising yields. Okay, so price and yield for bonds are inversely related. So when bond prices drop, yields increase. So it's a little backwards when you think about it, but it does make a lot of sense. So commodities and bonds have an inverse relationship. Dollar and commodities have an inverse relationship. Now, what that means is, let's take an example. Let's take quantitative easing. So we printed a lot of money. If you have a relationship between $1 and a barrel of oil, which is currently what is it today? $75. Is that the price today? What is the price today? Let's look. We are at
No, I didn't even look this morning. I think it was
$75. No,
73 yesterday.
yeah, no, we've rebounded 75 because the EIA came out with the stocks and it showed a little bit better economic indicators. So the inverse relationship, if you add more dollars, so if that relationship is $75 for 1 barrel of crude oil, and now you print more dollars in the circulation, there should be less. There's more dollars chasing this. So you have the dollar, even though we printed more, drops in value, and crude rises in value because there's more dollars out there. So the interrelationship between those two. And again, this is the reason that I talk about John Murphy's book, Intermarket Analysis. It is a fascinating read. And anybody that is trading commodities, stocks, bonds, anything, they need to understand these relationships, because when you look at commodity markets, it's not just one thing. So that is
You need to keep learning on this stuff.
I like school and I like football.
Yes. And like a lot of YouTubes, I don't have an affiliate link down below, but look up John Murphy on Amazon, John Murphy and Technical Analysis of Financial Markets. So the US dollar index, or DXY, can be a key indicator for commodity price trends. And again, folks, feel free to ask questions along the way. Really appreciate it because it helps us move the conversation along. If you're thinking of a question, probably somebody else is as well. So what is the emergence of the petrodollar system? So 3 big things that we need to discuss. One is the post-Nixon shock development. We already covered here how gold actually went up all the way to $150 from 38 in 2 years. So think about that. They tripled in value. And then you fast forward to the end, a decade, it's 650. So it's not, it's massively, massively interlinked. And that is the petrodollar system. When it decoupled from gold, now all of a sudden other commodities started seeing an appreciation of value. And that value is because of a devaluation of the fiat currency. So when you print more dollars, they're worth less. So that is super important. So in the 1970s, for those that weren't at an age where they could recall these, I recall this. U.S. and Saudi Arabia agreed to price oil in U.S. dollars in exchange for U.S. military protection and assistance. But during the 1970s, there was a lot of tenseness around geopolitics. There were wars, there were conflicts, and here in the United States, there was a gasoline shortage. So we had a shortage of gasoline, and that really provided a lot of volatility, didn't it, Bill?
Yeah, the biggest thing. So I was driving during that time, and so believe it or not, I'm old enough to remember when not natural gas, but gasoline was 33 cents a gallon. In fact, I'd seen it as low as 11 cents a gallon. And so what
Wow.
happened is that we went through the oil embargo, the Jimmy Carter period, where we went through the oil embargo, and we started seeing what the gas was not only high, it was not available.
Right.
I mean, you couldn't get it. And so that's when they had to sort of rethink some of this stuff and say, is this what we have to do what do we have to do to make sure we have reasonably priced energy for the United States? And so the volatility during that time was pretty intense.
Yes.
I mean,
The
it was like a
volatility.
war. It was like a war with Saudi Arabia without any military being involved.
Right. Right. Well, it was pretty intense, and there were a lot of economic challenges. You can think about the inflation wave that we've had over the last couple of years since the Ukraine-Russia war, because that really ushered in this massive, massive inflation shift. And this is where looking at the economics and oil is interlinked. And this is part of the reason that oil, economics, currency, and politics and geopolitics are all interlinked. And that's why everything matters. When you read a headline, it matters in some way in these markets. But the petrodollar recycling, oil revenues were reinvested in U.S. assets, particularly treasury securities, maintaining global demand for the dollar. It created kind of a reinforcement of the reserve currency. So, what about the evolution in the 1970s? That was the origins of the petrodollar system, and then the expansion, that petrodollar recycling really took hold. Then there was a consolidation around U.S. geopolitical influence. Whether or not that was the right for the world in the U.S. is very debatable, and there's a lot of challenges that have come out of that. And I'm not going to weigh on those. We are not political analysts. We are energy analysts, but it does drag us into the political realm in geopolitics. So in the consolidation, the petrodollar system consolidated that geopolitical influence and economic power on a global scale. So from the 1970s all the way to today, there's been an economic influence in the U.S. Now that relates.
So let's talk about the consolidation a little bit. Do you know what happened around that time, the consolidation?
No.
Because in 1983 is when crude oil actually emerged on the NYMEX exchange to be traded on NYMEX. So that started in 1983. As a result of a lot of this stuff, people were looking for places where they could actually get a little more consistency and being able to trade crude oil without having to trade the physical commodity.
Right. Okay. That makes sense. And that's part of the reason that when you look at the financial trading on NYMEX, most of them are not physical oil players. So this does have this period or this history strengthened the US dollar, had an impact on global trade dynamics, and gave currency markets and financial stability. So the petrodollar
Being on NYMEX Brian being on NYMEX gave them the opportunity to also be able to hedge it against currency exchanges.
Right.
So,
Right.
which is what we're actually really talking about, is the petrodollar system being actually a reserve system for the globe as a currency, and everybody's currency backs against the US dollar.
Mm.
That's what was going on. The US dollar was providing that stability in a currency, because in other countries, the currencies were so much more volatile.
Right.
I mean,
Yep.
especially where oil was being found.
Yeah. Well, and this is where the interlinking between the economic systems, oil, and geopolitics really came to play, because there was a petrodollar diplomacy, for lack of a better description, where the U.S. leveraged economic dominance over oil-producing countries. Again, not really referencing whether or not that was the right thing to do or the right long-term thing to do. I think there was some misuse of power over time, but the military and economic incentives aligned with oil exporting countries to where there was tension. However, they had a symbiotic relationship. Both needed each other. So the U.S. needed oil for growth, and the exporting countries needed oil, needed dollars or currency or economic value to grow their economies. So this really translated to a lot of security arrangements and military presence and regional implications. These get very complicated, very complex. And again, this could be an entire, we could probably be here for days talking about that.
Because
So
we didn't even mention about after World War II, the U.S. becoming the policeman of the seas for the globe.
right, which is changing
Because
in and of itself.
they had the largest navy at the time.
Yep. So the challenges and vulnerability of the petrodollar system, an over-reliance of the US dollar, geopolitical tensions, and emergence of alternatives. So cryptocurrencies, I'm going to talk about the last one really, because there has been a reliance on the dollar globally. You know, a lot of trade globally happened in the US dollar because of the economic um, underpinning of the petrodollar. That also created geopolitical tensions, you know, between countries that had a mislocated value because of that relationship. Then this is where we are. So we've talked about where we started, where we are, now where are we going? The emergence of alternatives, cryptocurrencies, that's one. There's been transactions that have happened with cryptocurrencies, non-dollar mechanisms using BRICS currency. And what is BRICS, put simply, Bill?
BRICS is a second OPEC, in other words. So it's Brazil, Russia, India, China,
Okay.
and then there's several others
Mostly
that joined.
emerging, right?
But yeah, mostly it's everybody who doesn't really like the U.S. Let's put it that way. You can sort of go with that way.
Well, maybe. I
I mean,
mean,
hey,
I know
but the
people
deal
in
is,
all those countries. We have customers in those countries. They don't
oh
dislike
yeah, but
us.
they don't dislike us. But what they're concerned is that the U.S. monetary policy has been going through some evolutions in the last 10 years, that they may not provide the security that they're looking for. Now,
Right.
I don't necessarily agree with that, but I'm not the one forming BRICS. So I really think this is based on Russia went and found Brazil to do this, probably paying the money to do it. And this is Russia's attempt to get around sanctions that we keep putting on Russia.
Right. Well,
And
I don't
so,
know if that's happening or not,
they're
but
able to trade outside. They're trying to trade outside the U.S. dollar. And what this does, this also helps stabilize their own currencies if they're going to trade in their own currency.
right. Um,
I would
Well,
I would go on to say that there's probably a lot more. The U.S. dollar still has a lot more impact on BRICS than they really want it to have.
yeah, I don't know about that. Alternatives to the petrodollar system, cryptocurrencies, regional initiatives, the global financial impact, and there are various case studies. And again, if you
Right.
want this document, message me, DM me, or drop something in the comments. So we're going to kind of wrap it up unless there's open-ended questions, which we are going to talk about some questions that we got offline after this summary slide. So what is the future of the petrodollar system? Well, one thing I wanted to point out is that the U.S. currently imports over 6.9, almost 7 million barrels a day out of roughly 21,000 of demand. So we import 7 million barrels a day. Let's round it off, but we export 5. That means there is actually a very good interrelationship between the exporting quality, the importing quality, and the valuation of those. So that is a very interesting nuance, but this is one reason that this economic influence has really changed some things. And this system,
Realizing that exporting crude oil is something relatively new to the U.S. I don't think we've even been doing it for 10 years yet.
nope, it was illegal for a long time.
It was. Well, it wasn't illegal. You were limited to less than 100,000 barrels.
Right. Which really made
Might as
it.
well have been illegal. Yeah.
It might as well have been illegal because the ships are too big for that.
Right.
So, so the shifting trade dynamics. Now you got to think more macro when you look at oil. Where is oil produced? Well, the U.S. produces some. The Middle East produces a massive portion for the world, and Russia. Russia is another big producer. So those three dominate the supply side of the equation. Those three also have a large portion of the demand side.
Right.
And what has happened as a result of various geopolitical reasons and rationales, again, we're not political analysts, we are energy analysts, shifting trade dynamics. Russia and Iran have stopped using the US dollar in bilateral trade. They're trading in rupees, not rupees, rubles. I'm going to get to rupees in a second, but they're trading in rubles, and that interrelationship is really changing things because Russia and Iran, they trade oil back and forth. China is increasingly using the yuan for oil transactions, and emerging, this one just came through. UAE and India are exploring and maybe have done, I don't know, deliveries of oil paid in rupees, signaling a shift away from the dollar dominance. So other countries that aren't.
I believe India has bought some Russian oil using rupees as well.
That's what it is. Yes, you're right. Russia and India. So these interrelationships are changing the economic landscape of foreign exchange, of oil trade, and economic systems. All of this is undertaking a massive shift in the energy markets, as well as a massive shift in the economic markets.
Wall Street loves to use confusing terms to make you think only they can do what they do.
So, the fact is, this is very complicated. We tried to cover this in 30 minutes, and we only scratched the surface. If you want to hear more on this topic, hit us up, let us know. We wanted to do this because this is actually changing how oil is traded today. It is also changing the interrelationship of foreign exchange. What is a dollar worth? Well, what is a dollar worth? If it's just a piece of paper backed by the good faith and government of the U.S. government, what is a dollar worth? Well, it's worth
Worth about a 1/75th of a barrel of crude oil.
Well, that's what it's worth relative to crude oil. But what is it worth to the euro? What is it worth to the
Right.
yuan, the yen, the rupee? Yeah, like the interrelationship. And again, that's where this is not promoted by John Murphy's book, but the Intermarket Analysis book is a phenomenal read. And this is going to be a bigger and bigger issue over the next 3 years. So if you or
So
your business is impacted by oil economics, understanding this relationship is critical. So,
now, folks,
Yes, once again, I'm not quite sure what that means, but you know,
if you're feeling that way, be sure to reach out to Brian. We are at Energy Rogue want to help you become a success in your business.
Yep.
And so what we want to do is be able to show you how all these different things impact the price of oil. If you have any energy use in your business, which is everybody, but if it's a major compact of your or composition of your costs, you need to understand these pricings and how this stuff works so you can accurately at least begin to predict what your cost of energy is going to be going in the future, therefore affecting your business cost and profits. So we can help you with that. Reach out to us, rogue at energyrogue.com, bill at energyrogue.com, Brian at energyrogue.com. Reach out to us. We can go over everything that we have available, and I think we can help you.
Yep. And listen, we kept the commercial out of it, but I do have a request, which is if you learned something, found this valuable in any way, please like, please comment, and please reshare this, because all of that truly helps, because we want to ensure that people understand this relationship, because that's the reason that we do this. We do this to put this out there. But if people don't like, if people don't comment, if people don't reshare, then not everybody gets to see it, and somebody needs to see this, because this interrelationship impacts economies, it impacts governments, it impacts geopolitics, and it impacts you personally and your company personally. So all of this
Be sure
matters.
and like and subscribe, because
Do not fret, my little woodland friend, for your life is in the hands of Ace Ventura, the detective.
And we like to have fun along the way. So listen, thanks so much. That's all I have today. We didn't have any comments coming in, so either we did a good job describing it, or everybody's looking cross-eyed, or they have fallen asleep. So hopefully it's not the last one, but that's all I have. Any parting words, Bill?
no, listen, just reach out to us. We're excited to help you. And if you did fall asleep, we are glad that we are able to provide you a little bit of rest during a busy day.
Yep. So thanks so much, and we will see you next week.